Okay, I guess we'll go ahead and call the meeting to order. First order on the agenda is the minutes from last meeting. Everybody get an opportunity to take a look at the minutes.
Yes.
From our October 29th meeting. Any questions, anything, any changes, corrections, anything like that?
No.
Hearing none. Do we want to, is there a motion to accept the minutes?
I will make a motion to accept the minutes from last meeting.
Is there a second?
I will second.
Okay, I think we'll do a roll call. Dave's a yes. Steve?
Yes.
Jeremy?
Yep.
Elizabeth?
I'm not going to vote because I wasn't here and I don't know.
Okay. Ron?
Yes.
Okay, minutes pass. Get those, I'll get you a signed copy, Carla. Moving on, new business, public participation. Members of the public watching. I got no, I got nothing via email that anybody wanted me to read in, so no public participation. Moving on. Ron, financial report for the quarter.
Yeah, I sent it out, and I'll go over briefly a few things. Reading from the first page, our equity investments are at 66.5% now, so a little bit above the max, but that's because it's been earned so well. And I had calculated, I'm not sure how close I'll be with Patrick on this. I calculated a return of 4.6% for the quarter, and there was a negative 1.4 for the first 3 months of our fiscal year. There was a lot of dividends which were automatically reinvested during the quarter. Changes in benefits. Jay Lotion retired in September and he received his first payment in October. Jason Norton retired in October and he received a partial in October and is full in November. Bill Curry passed in December and he has a dependent pension assumed by his spouse. Matt Rivers, this is actually in January, Matt Rivers requested a refund of his contribution, $61,090. If we could reflect that in the minutes. And the only plan benefit change that I know of in this next 3 months here is the 3% annual cost of living. And I did include in my report a list of all the pensioners and showing the amount that they're currently being paid and the amount of the 3% increase, what it will be in January. And I did indicate to those people that are not 55 yet, so they do not get a raise yet. And then the disabilities, those that are not 60, and the date that they were going to get their first raise. So that's about all I have to say about this report, unless you have a question or something.
I don't have any questions. Anyone else?
I'll make a motion to accept Ron's financial report.
Is there a second?
I will second that.
Okay, do another roll call vote. Dave's a yes. Steve?
Yes.
Jeremy?
Yes.
Elizabeth?
Yes.
Ron, do you usually vote on these? You want to vote? Yes. or no?
Yeah, well, I'll vote yes.
Okay, it carries. Accepted and filed. Investment presentation is what we got up next. Patrick, you want to
Okay,
get that out of the way first and you can
sounds great.
head on down the road, so to speak.
Yes. Or downstairs. I can walk downstairs. I'm going to try to share my screen here. I had emailed everyone the report, but I didn't realize it wasn't in part of your packet until I looked at it. So let's see if this works. Sure. Can everyone see that?
Yes.
All right, great.
Real quick, I'm going to step out for a second. Somebody just sent us a email. We're supposed to be on another meeting. I will be back. I trust Patrick to take over for the time being, and I'll be back in like 30 seconds. Excuse me, guys.
Okay. All right. So I'm going to go through everything as of December 31st, 2021. I'll talk quickly about the capital markets, and then we'll look at the overall returns and make sure that we actually had it a little bit higher than Ron did. So Ron, maybe you and I can circle up later, but either way, they were positive. But let's look at here. Capital markets. I'm going to take you to this chart just to show you how good everything was. And we're going to be focusing here with the 1 year number. And, 1 year or year to date as of 12/31, US equities were up almost 29%. International equities were up 2.3. Emerging markets were the one soft spot, down 2.2. But international was up 19. Investment grade fixed income is the closest to what your fixed income is, was down 1.5. Believe it or not, fixed income 2 weeks ago was down almost 2% for the year in 2 weeks. And that was just the fear of rising interest rates. So, really good numbers, a little bit softer on the bond side, and it'll show up in our portfolio. I put this in here just because, we're experiencing a little bit of volatility. It's to be expected. Last year, this chart goes back to 1980. And these red dots throughout the chart are intra-year lows. So if in June of last year, we were down 5%, there it is in 2020, right? But the year ended up 21.9 or almost 22%. We just look at the S&P returns. What I'll say to you is that we expect the market to be down at least 10% any given year. And you can see in 2020, we were down 31. In 2008 or 9, I think it's 8, down 49. Finished the year down 38. That was, really tough year. Steve, you and Ron, I think, are probably the only two that were on the board then. But you can see each year you have a different low, but on average, the market does pretty well. But we expect it to be down 10%. We have had really strong markets, and we expect the market to have some volatility. Couple of reasons why. We started 2020 with a recession. It was the self-induced recession with the shutdown, and that gray bar is a recession, right? The recovery is this green level. This is just kind of what we believe happened, and that is when you had the fiscal stimulus and the rates being lowered. We're now in this period of time called expansion, and then you have you have to see if the market can actually take hold on its own. So without fiscal stimulus, without low rates, in the face of rising interest rates and many other issues like supply chain problems, et cetera, can the market and the economy still move forward? If it doesn't, then we see a downturn, and that's that red area, okay? Many are expecting a downturn. Current growth indicators, payrolls have been really good, down at 3.9%. But what this doesn't pick up is there's 12.5 million people that have fallen off this that aren't showing up. That's a lot less people working than were working back in 2019, right? Retail sales have been really good, but they've come off. Housing's been good. Savings was good, so some good numbers there. U.S. economic indicators, the GDP has been really strong. Consumer confidence is one of the weaker ones, though. And really what that is, that's a function of this inflationary pressure. Unlike something that can cause you a problem once, inflation is something that causes you problems every day. You see it when you go to the gas station today, tomorrow when you go to the grocery store, tomorrow afternoon when you go to a restaurant or dinner, the following day if you go to a movie, and then you get your electric bill and you realize natural gas has gone up too. So you're constantly bombarded with these price increases. And what happens is consumers are not as confident. What that means is they stop spending, right? And then it impacts retail sales and other things. So we think this is a really important thing, that consumer confidence is kind of fallen off. Can everyone see the core CPI on the right-hand side here? This blue chart goes back to 2009, or the blue line is CPI. So consumer price index is close to 0 and various points. Right now it's at 7%. The big difference with CPI is a lot of people say, well, it's not as bad as it was in the 80s. The actual way they calculate CPI has been altered 3 different times since the 80s. So what that really means is that CPI is much, much higher than we're actually showing right here. It's definitely higher than we experienced in the late 70s. And so, that's a real drag on the economy. And it's going to probably slow some things down here. And the Fed's going to have to raise interest rates, because if inflation keeps going up, it could really get out of hand. So we expect the Fed to raise rates probably 3 to 4 times this year, hopefully not more. That being said, this chart goes all the way back to 64. Dark blue line is a 10-year treasury. You can see it came all the way down to, below 1%. Nobody was making any money on their bonds. Nobody was making any money on their savings. It spiked here recently, but it's extremely low. And, I think I just had my daughter and her husband now talking about they wanted to buy a condo because, interest rates are going up and, they got to lock it in. And I told them my first home was at 11% interest. So whether it's at 3, 3.5, or 4, interest rates are really still very low. I think the stock market has a lot of highly leveraged companies that have benefited from low interest rates, and they are feeling the pressures. I showed you how good the market's been doing in some areas, but if you look at NASDAQ stocks, and not the names that we all know and love, but stocks that no one knew that went up by 500%, they're down 60 to 80% from their highs of last year. And so, this rising interest rate is going to be tough. It's going to be good for you with your bond portfolio. The problem is as you own bonds and rates go up, the value goes down. And that's what this slide shows. Really, this is total impact of 1% rise or fall in interest rates. In your bond portfolio, somewhere probably between about a 4 to about a 5.5% duration. And we'll just say that's close to a 5-year bond, okay? And if rates go down by 1%, when we were lowering rates, your portfolio actually went up by about 5, okay? But we're on the other side of that now. And if rates go up by 1%, your bond portfolio's value, because we have a mark-to-market way of accounting for bonds, is it goes down by about 4.7%. And why that is, if you think about it, if you own a bond today that's paying you, we'll make it even, 1%, and tomorrow you can buy one for 110, the bond that was paying you 1% yesterday is worth less today, okay? Because you can buy one that's paying more. And that's what's happening right here. As rates go up, your bonds become less valuable. Now, unlike bond mutual funds that you might own somewhere else inside of a 457 plan, inside of a retirement account, inside of your own personal investments, when bonds are negatively impacted, and let's say I own the same mutual fund as you do and I sell, that impacts your return. Here with the pension fund, we actually own separate bonds in the police pension fund's name, so that as long as we hold those to maturity, this negative pressure on them does not impact your actual long-term return, because at maturity, even though your bond might be adversely impacted as rates go up, at maturity, it matures at par, which means that if you paid $1 for it, it matures at $1, even though during the period of time that you owned it, it might have gone below $1, okay? So just something to be aware of as we see negative returns in bond portfolios going forward. Last is the asset class return. And we've looked at this before. We call it the quilt chart for obvious reasons. And what this shows you is going back to 2010, the best performing asset class is the top. The worst performing asset class is the bottom. There's 2, 4, 6, 8, 10, 12, 14 asset classes that we show here. There's many more, but we break it down to 14 basic ones. What I'll draw your attention to is the 10-year return. The 10-year return on US equities is 16.6%, right? So we've had a really good 10-year return on US equities. On the S&P 500, it's even been higher. On small cap, it's been higher than that number. Mid cap kind of brings it down a little bit. But what I'll tell you is, if I went back to 2009 and showed you the same chart, The best performing asset class was emerging markets. And one of the worst performing asset classes was US equities and an average negative 9.6%. So when we're looking at US equities and they're up 16.6 for the trailing 10 years, and we go back 10 years and they were down 9.6 for a 10-year return, what it tells you is that we probably had too good of returns over the last 10 years, and we could expect something that's a little bit more, let's say 7 to 9%. And to get there, you might have to have some bad negative return years. And that's what we expect to experience. Let's see here. Is there any questions about anything that I brought up, or I kind of went through that quick? No? Okay. Real quick. Somebody, if somebody could mute, I'm hearing like an echo. I don't know. I don't think it's here. You guys hear that?
$195.42. This month it's going to be $357,374.
Well, anyway, I'm going to go on to the portfolio performance.
This is going to be followed by your member.
Urbana Police Pension Fund had about $51,600,000 as of December 31st. So outstanding returns or outstanding total. I don't know how we got to this because I remember Steve had said he couldn't retire till it got over 25 million, and that's over $25 million ago. And so really nice to see that big number. At this time, just looking at your assets here, not including anything in the checking account, equity component was almost 70%. 51.
Hey everyone, this is about the most complicated thing I've ever had to do. I am monitoring them. Yeah, I knew we were anticipating having
Are
this.
you guys hearing that? I just hearing that.
He booked me for Urbana Police.
Hey, Brian?
It's Brian.
1 second, I'll be right back with you.
Okay. I can talk over it if you're all right with it.
I think he's muted. Go ahead.
Okay.
Hey, sorry, I was on mute. Were you guys talking?
36.2 million is in
Yeah.
domestic
Brian, could
total
you
equity.
mute?
Here, let me, my volume's a little low.
Okay.
Steve, was that you?
Brian, it's Dave. Hey, could you put your mute on? I think we're hearing a little background from you.
I'm so sorry. I'm so sorry.
No
That's
problem.
good.
All right, good. Here we go. We got a little over 26 million in U.S. Domestic equities. Vast majority has been in large cap. Large amount of that's been in the S&P 500. ClearBridge Advisors, we had about $1 million with them in cash that we just, we sent $750,000 out for expenses, so you didn't have to sell anything. So that worked out pretty good. Mid-cap equities made up about 2 million, small cap right around 2 million as well. International is about just over your target at 19.15 with 9,878,000 in international total equities. Vast majority is with developed markets at 15.5, a little bit with emerging markets, but we're below our total with 1.8 million there. And then fixed income, you have Madison Investment Advisors and Garcia Hamilton with a total of 15 million, or about 10% below the target. But that target is one that we don't really usually shoot for. It just gave us the ability to go to that. And really the one we care about is the state target of 35%. So that might be something that that we talk about here in a little bit. Next page just shows you each of the breakouts as of December 31st by asset class, by asset manager, and then down below in number format. But let's look at the returns on page 13. You know, as of December 31st, Urbana Police Pension Fund, the quarter return we had was 532. The fiscal year-to-date return was 450. Year-to-date at 1234. You know, I mean, so great numbers, really smoking our assumed rate of return. Your 3-year return at 1439. 5 years at 1031, 7 years at over 8%, 10 years at over 8%. I mean, you know, just crushing your assumed rate of return. And since inception at 654. So really, really good numbers. See on the far right, fund started with about 3.6. There's been about $11 million that's come in, and there's been close to $40 million in growth, which is hard to believe, you know, and it truly shows the value of compounding. If there's no questions there, I'll move forward. Hearing none. If we break it out and take a look at the individual asset managers, we'll look at the year-to-date or the trailing 12-month number. They're the same. You know, really only place with some problems was emerging markets, down 5.2. And then you can see our bond managers. I talked about how they were adversely impacted by rising interest rates. And really what that is as rates go up, the bonds that you own go down. Hopefully those managers hold those bonds till maturity, and then they come out at par, so you get yield on them. Both these managers have been really short invested, meaning they're going out and buying shorter term bonds. And the reason they're doing that is they anticipate rates going higher. So as that money comes due, they can reinvest it for a little bit more yield. Lastly, I don't know if everybody can see this, but I love looking at this chart. You know, we'll just start in 01. The green bar is kind of dollars in. If you followed along, this is money that the active duty policemen and the community of Urbana have put into the fund. You can see starting here, we started to take some money out. You know, that has not impacted the fund at this point in time, but going forward, if we hit periods of volatility and you're taking money out as the market comes down, it's really hard to get back up. But this difference between the green bar, dollars in, and the blue bar, is the current portfolio, that's been growth of the fund. And so you can see, you know, last 10 years have just been fantastic. But even if we look at, you know, tougher periods of time, and just think about the pandemic, you know, 2 years ago, you know, the funds just come right out of those just fine. So with that, we did just send $750,000 to Ron. I believe that from the email takes care of your expenses until you start receiving some tax dollars in the summer. If it didn't, or the spring, late spring, we would probably need to look at possibly raising some funds between now and then. With that, I'm done. Steve and Dave and everyone else.
Well, Ron, do you think that 750 is going to be enough to get you by till the new tax money comes in?
Yeah, that's going to get us by for probably quite a while.
Okay.
Okay, I brought us here on this page. As of December 31st, there was 1,342,000 here on the far right-hand side in total cash in the fund or liquid assets under 3 months. We just took $750,000 out. So if you run into a problem, there's always money coming in between bond money maturing or dividends from stocks. So we could always come up with some money and help get that over without selling anything in the future or in the next couple months.
Yeah, we're supposed to go through this consolidation May 1, is it now? So I'm not sure, but I know the way it's kind of happened with fire pension is there's a period of time, now that we're consolidated, there's a period of time where we don't really have access to our funds. So probably good to have a little bit of flexibility.
Yeah, so
if they do it like they did with fire, they will not take any of the cash at all, and they just took the investments, and then of course we had to withdraw the cash from the accounts and put it in the bank. So at that point, once again, we'll sort of have to refloat the boat and make sure we have enough money, you know, to last us for a while.
Yeah, I just wonder if it's going to be, if they're going to do it the same way or not. I mean, they haven't really said, as far as I know, but.
no, so we've dealt with some of the fire that decided to go, some that have pushed back and they're not going until after this court case is settled. With the way, if they do it the same way the fire tried to execute it, which by the way, from community to community was very different. It's not a smooth, it's not like you push a button and everything transfers. But what we did was we we moved all cash out of all accounts into the cash account or your money market, which would be this account down here at the bottom. So all funds would go into that, except for $175 per fund, because they charge a transfer fee of $175 per fund. And so we would put that money in each of the accounts. In places where early on we did not do that, they actually took the cash and then they had to send it back, and it became quite complicated. So that's that, you know, on the fire side, it was very different. We do have some police funds that at this time would go before you that we work with. And as we go through that process, I can make you aware of it. I do know on the fire side, I still have communities that can't, that went in November, that can't get access to their funds yet. And nor do they have a full report of what, like, you know, something like this that's coming out to them. They have a kind of a letter that's been sent to them. So it's a little bit of a kind of a little bit cloudy for them. But that was as of the last meeting I was there, which was in December. So maybe by now it's cleared up a little bit. And I'm sure, Ron, you'll be getting sent that information for fire as soon as they have it. So you
Well, I talked to the guy this week. He said they were hoping to get us the statement out by February 15th. And that would be the December statement, which would show the values that were transferred in, would show expense charges and interest earnings, you know, credited to our account. So.
Okay, well, with that, it doesn't sound like you need any cash raised unless you told me you wanted to go back to the targets, and then we would raise some. You know, that would be your call here. If you wanted to go to the 65-35, but including your outside cash, you're probably pretty darn close according to Ron's report.
It sounds to me like we're close enough. I don't think it's worth messing with. And plus, with the market volatility that's probably ahead of us, I think we're going to be fine.
Okay. Well, if you guys need anything, please reach out. And otherwise, have a great weekend.
Well, thank you for your report.
All right.
Thanks, Patrick.
You guys take care. Bye now.
Okay, next up on the agenda is the fiduciary liability policy.
Yeah,
Update.
I've got it. So we got our renewal quote from our insurance broker. The 2021 premium, the policy for the current year that ends January 31st, so this weekend, it was $4,593. The premium for the year that starts on February 4th, they're asking $4,610. So $17 increase year over year, which seems reasonable. And for a lot of good reasons, we probably should keep fiduciary liability coverage. I don't know what else to say about it.
I would agree. I presume since we're talking about spending a little bit of money for that policy, we should probably take a roll call vote to vote on whether or not to expend those funds.
Mm-hmm.
So
I'll make the motion. So I'll make a motion to renew our fiduciary liability policy with Chubb for an annual premium of $4,610 for the year starting February 1, 2022.
okay, is there a second?
I will second that motion, Dave.
Okay, I'll go ahead and do a roll call vote. Steve?
Yes.
Dave is a yes. Jeremy?
Yes.
Elizabeth?
Yes.
Ron?
Yes.
Okay, motion passes. We'll go ahead and get that policy renewed for the next year. Moving on, next item on the agenda, audit reports. Elizabeth, did you want to?
Yeah, I'll just give you a quick summary. So you have the annual audit report in your packet from our auditors, Baker Tilly. There's really nothing notable here. There's no findings. Our net position has increased by about $9 million. year after year, and the analysis in here says we're funded at 71% of our liabilities. So you guys are free to read it and let me know if you have other questions, but it's pretty much the same numbers that Ron had, I think, in July for, based on June 30 year end.
Elizabeth, I know you can't answer this, but next year, they're going to have a lot less work time put in. Maybe not next year. If the transfer goes through on May 1, it'll only be a couple of months. But, normally they spend a lot of time on verifying the market values of all of our different investments and confirming those. And now all they're just going to have is one line, our number of our investment and the state funds. So, I would kind of hope that maybe that might be reflected in what they charge, but I doubt it.
Yeah, I mean, we'll see. Ron, that we're going through a selection process now for new auditors. So it could very well be Baker Tilly Ken. It could be somebody else. I think in the first year, in the initial year, they'll have a fair amount of work to do, kind of reconciling the transition right into the consolidated fund. But yeah, I don't remember off the top of my head what all the proposals were, because they've got it broken down into 4 different parts, including the city and the library. But I understand your point.
Okay. There's not really a way for us to not accept those audit reports. I don't know if we need to vote on it. It's more along the lines of it's there, or what have we done in years past? I don't recall.
I think we've made a motion to accept it.
Yeah.
Okay. I guess we'll go ahead and do that again if someone would make such a motion. How about me? I'll make a motion.
I'll move to accept the audit report for June 30th, 2021.
Okay. Ron makes a motion. I'll second the motion. We'll do another roll call vote. Steve?
Yes.
Dave is a yes. Jeremy?
Yes.
Elizabeth?
Yes.
Ron?
Yes.
Okay, that passes. We will accept the audit report. Next on the agenda, IPOPIF resolution and cash management plan.
Oh, I got it, Dave, if you want me to.
Go ahead.
So the Consolidated Investment Fund for Police sent us an example of a resolution that we need to approve. And so I inserted 2 names in there as our authorized representatives, which would be Dave and myself, mainly because we're here every day at the city building. And if it's anything like fire, there was kind of a scramble during the last week or 2 before and the week after. And so we're probably most available of all the trustees to, sign documents and whatever else needs to happen. And virtually, my recollection is with fire, at least all of the documents I think required 2 signatures. So you guys have that in your packet.
That makes sense to have you and Dave do it.
Mr. Mancini, are you with Reamer's office?
Yes, I am. Hi, everybody.
Hi.
Hi.
Thanks for joining us.
Yeah.
Do you have any insight into current litigation that's pending regarding IPOPIF that maybe you could share with us?
I do. So since about mid-November, we've been waiting for the judge to make a ruling on the cross motions for summary judgment, which would rule either constitutional or unconstitutional. We were back in court last week on a temporary restraining order filed by the plaintiffs in that case. There's not much detail to the temporary restraining order. Basically, they wanted to stop the DOI from sending threatening letters to those funds which did not transfer their money. Specifically, they were fire funds. So the judge indicated that he was intending to rule by the end of the year, but he had a family medical issue come up and it kept him out of the office. He understood that he needed to rule as soon as practicable. So he apologized to the parties. We were back in court this week. and the parties discussed an informal agreement, not an injunction order, where the Department of Insurance and the Consolidated Board would stand down on any threatening letters that they may send to any of the funds that didn't transfer. Based on that representation, the TRO was kind of just dismissed. But to my knowledge, to this point, I don't know that that agreement has ever been reached between the parties. Last we heard, there was some question as to whether or not the agreement would apply to all funds. So we're kind of in the weeds here, and the judge again reiterated this week that he understood a ruling needed to be made, and he was hopefully going to make one shortly. So that's the status of the consolidation lawsuit.
So if we pass this resolution, all it does is say, these are our authorized representatives. It doesn't say we're agreeing to do this on May 1st.
That's
Or-
correct. These would be the two people that can transact business. It would be authorized to transact business with the consolidated fund. They've been requiring two people, mostly because one may submit the request and they're going to confirm it with the other. And that's been the policy, at least for the fire. So that way they always have two confirmations from both agents if there are some transfers or things like that that need to happen down the line. I did hear you guys talk earlier. There is a cash management policy out there on the website for the fund. They're estimating a 60-day freeze at this point for funds that are to transfer over to the consolidated. And then they're anticipating a 7-day turnaround on requests for money. So it's a little different than fire. But that's the status of that at this point.
I'll just be frank. While there's lawsuits pending, especially with court, the judge saying the ruling will be forthcoming shortly, I don't see any point in pushing forward with any sort of transfer until we see what the court says. Why would we do that? What would be the point of that? I mean, if we start turning over our money and something changes at some point in the future, that seems like it could be problematic for us if we know there's pending litigation.
Yeah, so we wouldn't start turning over our money. Like if it works like fire, it basically all happened on one day. And as I understand it right now, they think our day is May 1st. So we can do this or not, but if we don't do it, it becomes time sensitive. We might have to have a special meeting to do it, which is, I think, what we ended up doing in fire pension, because we didn't do it and then we got under the gun and then we had to get it done.
Yeah.
I don't.
Just following up on Elizabeth's comments, the other thing you're going to have to do is adopt some sort of a cash management policy, because there's going to be a period of time where you're not going to have access to your investments. So you're going to want to have enough cash on hand during that frozen period of time where you can pay your bills and pay your benefits. So that's another thing that kind of goes hand in hand with this process. And honestly, you can defer it, but it may have to require a special meeting down the line.
Well, I guess my opinion would be pretty much in line with Dave. I think we should wait until there is a decision made and the lawsuit is resolved before we take any further action. And if that requires another quick meeting, then so be it. I realize it's most likely inevitable, but I don't want to get caught in the middle of a prolongated court fight.
I just feel like if we've got $50 million under our control right now, and just to turn it over without knowing what the final ruling on this is going to be, I'm probably it's going to end up happening. But if we're looking at it from the standpoint of fiduciary, once we turn over that money, it's not like it's going to come back. I think it would be much more difficult to claw it back should there be some sort of an unexpected court ruling.
I mean, we don't have to do this now, but again, all this does is says who's going to be designated to do that when the time comes. It doesn't say we're going to do it, but either way, we can just hold it over onto our next agenda. And if we have to have a special meeting, we have to have a special meeting.
I'd rather do that.
I agree.
Ron, Jeremy, any
Yeah, I agree.
thoughts or
Same,
opinions?
same.
Okay. Do we want to take a vote on that or just move it on?
I think we can just postpone it to the next meeting, and if need be, if the need arises, if the case is settled and we need to take action, we can just have another meeting and make it official.
Okay. Well, I suppose moving on, next item on the agenda, annual pension raises. Ron, I think you already kind of touched on those, didn't you? You still there, Ron? You're muted.
Okay, I'm here. Yeah, I had discussed it in my financial report, but I had included those pension, there was a list of them and showing all the regular pensioners and their increase and those that didn't get increased because of age, and the same way for the disability. So I don't know if we need to approve this list or just we more or less approve the financial report before, which was part of it. So
Um,
Are these COLA raises? Is that what we're talking about?
Yes, I believe so.
Yeah.
Okay. Yeah, you do have to pass those for them to be effective.
we need to list them.
well, we have in the past, we've approved the list, but by law they get the raise. So I don't know if we don't approve it and don't pay them. We can guess what's going to happen. But
Is this an issue of can we just make a motion to the ones that are included in Ron's quarterly? You might not have been on at that time, Mr. Mayor. At the beginning of our meeting, Ron gives us a quarterly report and in that report is included any changes regarding pension payments over the course of the quarter. So we already voted to accept those. Is this something that we can just essentially vote to, again, accept? Not something we have to go through name by name, do we?
You do not. No, it's a statutorily required 3% COLA. There's really no discretion on it. It's just perfunctory to take a vote and pass it. So.
Okay. Does anyone want to make a motion?
I'll make a motion to approve the statutory COLA increases for all pensioners.
Is there a second?
I'll second it.
Sure.
Roll call vote, Steve?
Yes.
Dave is yes. Jeremy?
Yes.
Elizabeth?
Yes.
Ron?
yes,
Yep, okay. We're having some internet issues, Ron, kind of cutting in and out a little bit. Next item on the agenda, discussion and board policy, RE holiday pay for persons in investigations. This has come up in the last month or so regarding a person that is going to likely
Detective Marcotte, 301, please.
be retiring in the next quarter. He's the sergeant in charge of investigations, or he's currently assigned to the investigations division. Elizabeth, I think you sent out an email with an attachment yesterday. I don't know if everybody had an opportunity to read through it. Mr. Mancini, this might be news to you. I don't know, did Mr. Strand pass it on?
He mentioned something about it, but I didn't catch what he said. So if there's an issue, I can talk to Brian.
Well, it is an issue, and I think it's something that we need to get to the bottom of, I suppose, rather quickly. I don't. Elizabeth, would you like to lay out your letter? I don't want to speak on your behalf.
I asked Brian to give me a legal opinion on whether holiday pay for certain of our employees is in fact part of the salary for purposes of pension calculation, because it's not essentially a fixed amount. And if you look at the Illinois Administrative Code, it seems very clear that it's not, even though it has been handled that way in the past. And so for my peace of mind, I don't feel like I can make the calculation the way I'm being asked to, or vote to approve a pension on that basis. If he wants to give me a legal opinion that says that's right, I'm happy to do it. And I also think there may be another solution, and this isn't really for the pension board, but this has to do with, this is related to the labor agreement and how certain employees are or are not paid for holiday time. So there's a potential solution that actually doesn't involve the pension board, it involves the city and the union.
Yeah, so there's two aspects, and you're exactly right, Elizabeth. The way the courts look at it is they look to see if the collective bargaining agreement includes holiday pay as a pensionable pay level. And then the other thing they look to is whether or not the city or the village has appropriated holiday pay to each officer as part of the salary appropriations it does on an annual basis. So the case law I'm talking about left open that question as to when is holiday pay going to be pensionable. We don't have a clear answer on that. But what I said is what I understand to be the law related to whether or not it would be pensionable. It first must be covered by the CBA. It second must be appropriated expressly as a part of the officer's salary, not just some number in a line item in a budget ordinance passed by the municipality. So that's what we've told other municipalities in the past, and that's what the law says today.
Yeah, and I appreciate that. I don't know. I sent a letter to Brian. I just sent it yesterday because I had forgot this was going to come up on the agenda. So I'm assuming he'll look at that, or somebody will take a look at that and give us a legal opinion.
Yeah, we're probably going to need some more back and forth from you to get information about the appropriations ordinance, the budget, these CBA. We have to look at all of that to have any ability to give you an opinion. So
yeah, and that's fine. And I copied it to all the other trustees, so they should be aware of this. And there may be questions you need to ask them as well.
yeah,
I'm not, given what I understand, I'm not comfortable with that practice. I'm
Okay.
not, and I need to be comfortable.
So the practice as has been going on forever is that in the FOP contract, officers and sergeants get 9 paid holidays per year if they're in the patrol division. They work 12-hour shifts. It equals 108 hours of pensionable salary, I suppose, included to 2,040 hours, 52 weeks times 40, 52 weeks times 40 hours a week. The investigators work a different schedule. So the 9 holidays for patrol officers are paid regardless of whether they work or not. They work 12-hour shifts. Investigators work 10-hour shifts, and some of the holidays are required to be taken off. They're not allowed to work. And because of that, we've always paid everyone because the investigators are not a separate civil service group. They're simply patrol officers who are assigned to investigations. And because there's no special agreement, there's no test, there's no civil service posting, anything like that, they can be assigned to investigations and removed from investigations at any point in time. Because of that, my understanding is because of that, when it comes time to calculate pensionable salary, everyone's has been included. Everyone sergeant and below has been included in the same way, essentially 108 hours of holiday pay. So that's that's kind of the issue that we're having now. And we've done that for detectives and sergeants in investigation previously that have retired while occupying that position. And because it's come up recently again with the sergeant who's getting ready to retire, that's what's brought this up. I've made my case pretty clear. I don't see any point in, we've done it this way forever. The Department of Insurance has audited us since this. It's never come up. It's never been an issue. I don't see a reason to make it one now. I certainly don't think it's fair from a management standpoint to be treating them separately for doing different work.
Vincent, a little more background on it. It used to be that people were moved back and forth from patrol to investigations a lot. I don't know if that was the chief's policy or what, but would not be unusual to see lots of them serve 3 months in one category and then go to patrol back for the 3 months and vice versa all along. So while they were, of course, in patrol, they were having their contributions withheld on that holiday pay. And then they're not when they're in investigations. And so I know it's a good question Elizabeth brought up. It's one that I have tried to have thought about on a number of different occasions when I was in her shoes. And, you know, at one point, there was just an agreement with the police, whoever the police chief was at the time, that if they were in investigations, they would then, before they retired, they would get transferred back to patrol. And then they would retire as a patrol officer. And that sort of seemed to take care of it, because then they were back on the holiday eligible pay list. So I don't know. That's about all I've got to add to it.
Yeah, so I understand what you've done in the past, but if you want a legal opinion, I got to give you what I understand the courts to say about it. Or if you just want to go with what you've done in the past, that's your discretion as a board. So I guess I'll wait to take direction from you. I'm not sure if we have direction at this point. Do you want us to tell you if you're wrong?
I personally would like to have a written legal opinion. I think Ron has even said he thinks there might be some lack of clarity about it. So I think we should have that to make sure that we're compliant with the law.
Yeah, I think Elizabeth asked a good question. And then I would also ask it, if we decide on, if you come down and say that really they should not be eligible for this holiday pay, then what happens if they do transfer back? If the chief does transfer them back to patrol before they retire, are they then eligible for holiday pay?
I think I went through that in my letter, because if you're tier 1, all that matters is where you are on your last day of work, basically. So I get that can happen for tier 1 employees. For tier 2, it's a whole different thing. I mean, it's going to be a blend of over a longer period of time. It's not calculated based on the last day. But if, you know, I think we just need the answer. We need to make sure we're legally compliant. If the answer isn't what we want, I'm not trying to be unfair to anybody. There's another solution potentially between the union and the city, but that solution doesn't involve the pension board.
That's fair. That's fair. So we'll go ahead and we'll give you, we're not going to give you an opinion because there is no anyone currently pending, but we'll give you an analysis of the law as it stands presently. And, you know, that's always subject to change, but we can do that.
Yeah, I mean, to me, when I look at the situation at Hanover Park, it's pretty similar. And you know what I'm talking about, because I think your firm might have been involved in that.
We do know that case, yeah.
Well, while we're talking about legal opinions, I think that there's another issue pressing before the board that has never been brought up to the board, that the city has made some agreements with previous members of the pension fund that I think are going to really affect the pension fund in the coming months regarding paying out pensions. And it's, to my knowledge, never been talked to with anyone from the board. The best I've gotten is an idea that lawyers were involved whatever that means. But I don't know whose lawyers. I don't know whether it's pension fund lawyers. And so I really think that we need to get to that, because when we're talking about paying out pensions and regarding large expenditures, the board has been left in the dark on that issue. I won't bring up the member's name, but it's someone in the fund that the city has made an agreement with, for whatever reason, to pay out a pension. And I don't know that that's appropriate or possible. The city doesn't pay out pensions. The pension fund is the body that pays out pensions and has to approve these pensions. So
just to be clear, yeah, the city does not approve pensions. We make personnel decisions, and that happens on a fairly regular basis.
this is
And-
not a regular thing.
No, it's not I know what you're talking about. It's not a regular thing, but there are all kinds of personnel issues that we deal with, including pay increases for certain employees. And anytime it affects somebody's compensation, it affects their pension. But we're not making personnel decisions with that specifically in mind. And I'm not going to talk about specifics about any certain person.
I guess we're gonna obviously need to know a whole lot more, because nothing like this is in my notes in terms of what exactly is going on between the municipality and a former or current employee. So I can't really comment too much, Dave, on it. I'm gonna have to jump off the call. Brian Labardi is calling in right now to take my place. Brian's more senior than me even, so you'll be in good hands. If he's in the waiting room.
The host would like you to unmute your microphone. You can press *6 to unmute. You are unmuted.
Hey, it's
Hey,
Brian.
it's Brian Labardi.
Hi, Mr. Labardi.
This is like having the full rotation of the firm. You've had two Brians and a Vince.
Okay, getting you all. Well, boy, you're coming in at a kind of an awkward moment.
Dave, he was listening. He was in my office listening, so you're not going to have to get him too up to speed.
Okay, great.
We're making a smooth
I was-
transition.
I was eavesdropping on your conversation, and I'm too ugly to be on camera.
That's perfectly fine. I think that this is another issue that we have a firm that represents the board. I would love to get our pension board's opinion based on whether we're going to be paying out this upcoming pension. But again, nothing was shared with anyone from the board other than what I know through my employment here at the police department. And I've got some real questions about this one. And you say you're not comfortable with the persons in investigations holiday pay. I feel the same way about this one. I'm not comfortable paying out a pension based on a personnel issue that was agreed upon between the city and the officer. So
Well,
I don't
Dave,
know.
Dave and Elizabeth, I understand there's some personnel issues here that don't need to be aired in public so much, but maybe, I don't know, if during the next meeting, or perhaps, I don't know what the timetable is here, Dave, but maybe the next meeting, or if we need to at some time before that, we could have a meeting and go into, what do you call it, private
Session.
Yeah. And so that we all know what's going on, because
I would
really,
have to-
what's that?
I guess I'd have to ask the attorney on the line if that's appropriate for us to go into closed session. And even if it was, I don't know that it's appropriate for me to share information about a particular personnel matter on the city side.
Well, let me make a couple of general observations, and maybe that will help. And if it doesn't help, tell me that was totally useless. The first thing is in regard to holiday pay, in regards to whatever this additional officer who apparently has some personnel matter is concerned. Remember that any time an application comes before the board makes a determination on that application. And if you need to, and it sounds like you might, you have a hearing on it. So if there's going to be an issue as to whether or not holiday pay is or is not pensionable for a specific officer, our recommendation would be, look, we're going to gather the information that, Vince talked about earlier, that we would need to review to make a determination on that. And then we're going to have a hearing. And the board will ultimately make a determination on whether it is or is not pensionable. The buck stops with the pension fund. I mean, they make the determination on whether it's pensionable or not the city, not the DOI, not our office. As far as the closed session thing is concerned, obviously the exceptions for closed session are quite limited. So based on what you're talking about now, I'm not sure I have enough information to tell you whether you could have a closed session. Typically you'd have a closed session after a hearing. You can enter closed session to deliberate evidence or testimony that you've heard during an open hearing. Obviously you haven't done that yet, so that doesn't apply. I mean, the other one that we see in the pension board context frequently, of course, is litigation, but it doesn't sound like you have any litigation pending either. The personnel matters exception doesn't really apply to pension funds because you don't really have personnel. So I guess maybe the long-winded answer is it's possible that you could have an executive session on this in the future, but I would need more information and you would need specific events to occur that would allow the board to do that. Does that help?
Kind of.
I think so, but I agree with Dave that the board needs to know the facts before we can make a decision. And right now, we don't know the facts.
And is this the facts referring to this employment issue or the holiday pay or both?
No, I'm not worried about the holiday pay so much. I agree with Dave that, this is the holiday pay has always been this way since my time there, starting in 1980, wherever, 7. But as far as these deals that have been cut with officers over personnel issues, we have not been kept up to speed on this. And I don't know how we can make a decision on granting a pension when we don't know the facts of what has been discussed and promised.
Yeah, so my suggestion would be whenever you have a retirement to come before the board has the statutory duty to ensure that the information presented to it is accurate and sufficient for you to make a decision. So if you have a retirement application come before you and this matter is an issue and you don't have enough information, we'd convene a hearing to gather whatever information the board needs to make a decision.
Well,
Steve,
if no, go ahead,
Steve,
Ron.
I'm sorry, I have to bow out. I have a doctor's appointment that I could not change. I tried to, but could not change. So I'm sorry, I'm gonna miss the rest of the meeting, so.
Okay,
Well, thank you, Ron. Thank you for your reports.
I think this might be one that would head toward that hearing then, because most of them are this one is outside the norm, very much so. And it's something that hasn't been shared with the pension fund. And if we're talking about paying out a pension in perpetuity, as what most of these are, I'm not comfortable doing that in this situation without more knowledge about what has been agreed to regarding pensionable amounts and rates that someone is going to be receiving a pension. So I don't know if there's a way for us to come to a decision on this prior to the person applying for the pension or not, but
What's the timetable, Dave? How soon?
I don't really know.
I don't think the person that he's talking about is eligible for a pension for probably 5 years.
Okay.
It wouldn't be paid out, but it would have to be granted this summer, I suppose. It won't be before the next quarterly meeting.
Okay.
I don't know where we go from here other than when the time comes up to grant it, if there's no more information that's shared with the fund at that point. Stop and decide at that time if we want to grant it or if we need to hold a hearing.
Yeah, so my suggestion would be, I mean, the triggering event is usually someone has submitted an application for benefits. So if and when that happens, forward it to us and then we can see where we want to go from there. But unless and until an application is made, you really don't have anything to do.
Okay. I suppose we'll move on to the next item on the agenda, new officers. Jaden Banks and Neil Mueller started on January 13th, 2022. I have both of their applications for membership. They have been received. Both of them will be Tier 2 employees, no previous Article 3 employment for either of them. They're both currently in PTI, as has been the case for a number of years now. We do still need to vote to approve or reject them into the fund, but the city hired them, so it's been my understanding that if the city hires them, then we're going to approve them.
I'll make a motion to accept Banks and Mueller into the fund.
I'll second it.
Okay. We'll do another roll call. Steve?
Yes.
Dave is a yes. Elizabeth?
Yes.
Jeremy?
Yes.
Ron is not present currently, but that's still a quorum. So they've both been approved. Today is the 28th of January. I'll try and get this around to get signatures from everyone so we can get these put in their files. Oh man, I really wanted to run this by Ron. So speaking of, the last thing on the agenda was retirements that we talked about. Ron talked about in his financial report. Just to, I suppose, read it in. Jay Leshin retired 9/28/21. Starting pension $4,775.21. Jason Norton retired 10/24/21. Starting pension $5,905.67. Any questions on those, or do we need to? We need a roll call vote to approve those as well.
It sounds like, I mean, based on what your agenda says, it reads like you approved it at the last meeting. Did you approve it at the last meeting?
I don't think we did because well, Norton was 10/24. Maybe we did we?
I'm just going on the agenda that I have says applications were approved at last meeting.
We approved it at the last meeting, but we were asked to put the specifics into and read them into this meeting.
Oh, okay. It was
We
the
didn't
dollar
have
amount.
the contributions and whatnot at that point, so we couldn't say what the starting pension value was going to be. And that was the purpose, was to read it in.
Thank you, Carla, for reminding me that we did approve them at the last meeting, but we wanted to get the dollar amounts in the minutes. So we've done that. This might be a question. Maybe you guys can help me with this. So this is regarding Matt Rivers. Matt wrote his letter. I have it here. He requested to withdraw his pension contributions. But he called me the other day. Apparently his intention is to roll it over in some type of retirement vehicle. And his advisor was having a hard time understanding that he's already paid taxes on it and was looking for something in writing from someone saying that that had already occurred. And that gets back to, my apologies. Just moved offices and I'm still trying to sort stuff out. What's the term I'm looking for? This would have happened long before my time on the board, Steve, when we decided that we were making contributions, pension contributions, post-tax. So income tax has already been paid on those contributions. Therefore, when we pay out, we
Yes.
can give that money to them. I believe employer pickup. We have never, my understanding is that we have never participated in the employer pickup, I don't know what you call it, plan. So
As far back as I remember, pension contributions have always been taxed. And therefore, unlike most departments, I think most departments do it just the opposite. But ours have been taxed. So when an officer leaves, like in Rivers' case, there are no tax consequences when he pulls that money out because he has already paid taxes on that.
Right, yeah, and even it's different between police and fire here. But, I mean, if he just needs a letter that says he's already paid taxes, I'm sure we can, between Carla and I, we could come up with something for him. Is that what he's looking for? Something that looks kind of official that says?
sure, yeah, I think he's looking for something official that he can. So I sent him some links on the internet, kind of explaining it. Who is it that wrote a good book for the IPPFA last year?
Dan Ryan.
Dan Ryan. So I had Dan Ryan's books and I sent him the link to like that portion in the book that kind of explained it and so on and so forth. But I think he would be much
Doesn't
appreciated.
he have payroll records showing he's paid taxes on this?
Oh, well,
Whether he
Yes.
has it handy, I don't know, but we do.
probably. Yeah, I don't know. if
We
could get him-
can show that. We can show that. The thing the advisor may be tripping over is the fact that these are post-tax contributions. Usually when you want to stuff it into your IRA, it has to be a pre-tax contribution that you're putting in there.
Okay,
They usually don't mingle well. And I'm sure that's what the advisor's having a problem with. They're trying to put it into a Roth or an IRA and it doesn't fit.
that
He's
He
not going
wasn't-
to get benefit from it.
That might be the case. He was just, he was doing his best to explain it to me and I was doing my best to explain it to him. And I think we were getting about 80% back and forth. Like he understood what I was saying. But he was just looking for something, I suppose in writing. So, but
I think we
wouldn't
can
even-
come up with a letter, just, and put it in writing for him. So if he needs to give it to his advisor, he can show it to his advisor and just say, this was all taxed before it was contributed to the pension fund and yada, yada, yada.
okay, that would be great. I think that'd help Matt out and, that's all I have on that. Where did I put my agenda? That was it. That was the last thing on the agenda, wasn't it? Here it is.
We also mentioned Bill Curry's passing. Again, that was
Oh.
part of Ron's report.
Page 2, yes. Yeah, it was part of Ron's report. Bill Curry passed away. I've got a copy of his death certificate that I'll file if you haven't already done so, Carla.
I wanted you to see it was received before I put it in the file.
Sure. I didn't
I've
do a very
made
good job.
a copy of it in a PDF and put it on his records.
Okay, perfect. I should have put a note. I'm the one that put it on your desk. So,
Ah.
yeah, I saw it.
Oh, good.
Um,
I'll put it in the file.
Okay, perfect. And Sue Ellen we have contacted her and she's all set up and we got all her necessary paperwork done. That's it. That's the last thing on the agenda. Where did the fire department or the fire pension board have a date set for their next meeting?
April 29th.
Okay. So how are we doing this on April 29th? Are we Zooming again? Are we going to try and meet in person?
They set for Zoom until they figure out something different.
Okay. Suppose we'll just follow along then. April 29th at 1 p.m.
Yes, and let's hope Zoom is a thing of the past at that point.
I agree.
I've been thinking that for 2 years and it hasn't worked yet, so.
Nothing else on the agenda? Anything else anyone wants to share? Hearing nothing, I suppose I will entertain a motion to end the meeting at 2:18 p.m.
I will second that motion, Dave. Thank you.
I guess we'll keep doing roll call votes. Steve?
Yes.
Dave's yes. Elizabeth?
Yes.
Jeremy?
Yes.
Okay, meeting's adjourned. See you guys in April.